Just a quick note before we start today's video. If you would like to purchase the SPX Daily Key Levels Indicator in return for you taking your time for watching this video today, you can email us at daytradinggps@gmail.com to request a discount promo code. And in return for you sending that email, we will send you a promo code for a significant discount promo code to purchase the indicator at the link you see below. This link will also be in the pinned comments section of the video for your reference. Thank you. Hello, in today's video we'll be taking a look at a massive 691% gain on SPX puts for Tuesday's February 3rd, 2026 trading session for the CBOE SPX index utilizing the SPX Daily Key Levels V2.0 indicator. Now, some of you may already be familiar with how this indicator works from seeing our other videos, but for those who are not familiar with this indicator, I will briefly run through how this indicator works, and you can also find in the description of this video links to other videos where there are longer SPX sessions where we go into much more detail about the indicator and the daily key levels trading strategy. And there's also a link to a general overview of this indicator, as well as a link to a Google Drive document that you can open up, and then you will see specific videos on certain topics concerning use of this indicator. So this indicator is for the TradingView platform only. You can place your trades with any broker that handles SPX options, such as Webull, Robinhood, TradeStation, Thinkorswim, E-Trade, or virtually any other broker that handles SPX options. However, for charting purposes, you use this indicator on the TradingView platform. We're on the SPX CBOE symbol, so in TradingView, you simply, under symbol search, type in SPX, and then look for the SPX symbol under the CBOE exchange. That is the official SPX index that everyone follows. We're on a 2-minute chart. That is the recommended chart time frame for this particular daily key level strategy with this indicator. You can, however, use chart time frames of between 1 minute and 5 minutes if you prefer a different time frame. However, as you'll see in most of our SPX session videos, we always use the 2-minute time frame, as we have found that to be the most consistent performer for entering and also managing trades. Okay, so at 9:30 a.m. Eastern New York time on the market open of SPX, you will get these daily levels on your chart, starting with the most important level, the SPX Bull Bear Key Price Level, or KPL, which for today's session was 69.9136. You'll also see these other levels here, the S levels below and the R levels above. We've zeroed in on just the R1 level, the Bull Bear Key Price level, and the S levels below for this particular session because of the way that price action dictated from the opening bell. However, as you can see here in this table here, you have R1 through R6 above the Bull Bear KPL and S1 through S6 below the Bull Bear KPL. For trades taken off of the Bull Bear KPL, you have a QL above level for your tight stop loss on bearish trades, or a mid BBKPL R1 to use as your standard stop loss for bearish trades from the BBKPL. If you were taking a bullish trade, then you would simply turn on the QL up below the BBKPL, and you would turn on the midpoint level below the Bull Bear KPL, and those would be your tight or standard stop losses for a bullish trade from the BBKPL level. Now with this indicator, you can take bullish or bearish trades off of any of the main key levels, which are either the SPX Bull Bear KPL level, or the R1 through R6 levels, or S1 through S6 levels. However, at the beginning of every session, most of your focus will be on the Bull Bear Key Price level, and that is typically the one that's in play at the beginning of 90 to 95% of SPX sessions throughout the year. However, as price moves through the session, other trade opportunities may present themselves on either one of the S levels or one of the R levels for either bullish or bearish trades. The QL levels and the midpoint levels are available to be turned on in the user control panel above and below each one of the main key levels. You'll also see these other levels here, the PMH, which is the SPX pre-market high, the PML, which is the SPX pre-market low, the YDH, which is yesterday's daily high, specifically the previous day's RTH session high, the YDC, which is yesterday's daily close, or the previous RTH session close, and YDL, which is yesterday's daily low, the previous session's RTH session low. So here we have the 9:30 a.m. opening candle here. As you can see, it, even though it wicked above the bull bear key price level and this YDH level, which is a very direct confluence in today's session with this bull bear KPL, you have a candle that closes below the bull bear KPL on this 9:30 a.m. candle that closes at 9:32 a.m. So that is your bearish entry signal for a trade taken from the bull bear KPL level. Now, as far as strikes, your main standard play with this indicator is going to be the strike closest to the level that you're taking the trade from. In this case, the level we're taking the trade from is the bull bear KPL 69.9136. So that is going to be the 69.90 strike being the closest one to this level. And since we're in a bearish play here, that is going to be the 69.90 put. Now on the close of this 9:30 a.m. candle, which closes at 9:32, the ask is $13.90. So that is the entry on the 9:30 a.m. candle close below the daily bull bear KPL level. With this indicator, there are two different types of trades that you can take. Scalp only trades and regular trades. Scalp only trades require a one level move in your favor to exit the trade. With scalp only trades, you are looking for the quick in and out. You are not going to be managing your trade past the scalp only threshold. You are simply going to enter your trade and then you're going to exit your trade at the one level move in your favor. The one level move in your favor on a bearish trade from the bull bear KPL is the S1 level. So as you can see here, the scalp only exit was hit at 9:54 a.m. about 20 minutes or so after this entry. And here on the bid, on the close of the 9:54 a.m. candle, we have $23.90. So that is a gain of $1,000 from your entry at $13.90. So that is $1,000 per contract gain. However, with this particular indicator, there is a second type of trade called a regular trade. A regular trade differs from a scalp in a couple of different ways. With a regular trade, you have several different options available to you about exiting and managing your trade once the trade hits the minimum 1.5 level move in your favor. The 1.5 level move is calculated from the level that you're taking the trade from, and then the direction of the trade is down in this particular case. So 1.5 levels down is the mid S1, S2 level from the bull bear KPL level. And as you can see here at 9:56 a.m., the mid S1, S2 level was hit for the regular trade and that minimum 1.5 level move threshold. So that is the designation of TP1 for a regular trade, as that is the minimum take profit level for a regular trade. Then each succeeding level below, in this case below because we're on a bearish trade, each succeeding level below the minimum 1.5 level move threshold becomes an additional waypoint for managing your trade, including this YDL level. So any of these levels, the PMH, the PML, the YDC, the YDH, and the YDL, that happen to be in the direction of your trade and they occur beyond the 1.5 level move threshold in the direction of your trade, those also count as additional waypoints for decision making in managing your trade past the 1.5 level minimum threshold move. In this particular session, only on bearish trades from the bull bear KPL is there one level that would qualify for that, and that is yesterday's daily low. Now we'll go through the trade now, starting with the put entry, $13.90 from this candle close on the 9:30 a.m. candle. We have our QL above the BBKPL. That is the tight stop loss. Our midpoint above the BBKPL is the standard stop loss. Here at 9:56 a.m., we have the 1.5 level move threshold met, and at that point the bid is $31.20. At this point here, you have several options. You can either exit all of your contracts, or you can adjust the stop loss to break even, or break even plus a profit buffer if you would like to add a profit buffer. And a suggested profit buffer at this point would be somewhere in the 10 to 15% range above break even. However, there are pros and cons of adding a profit buffer, and generally speaking, if you're trying to let the trade breathe a lot, it's best just to leave it at break even. It really just depends on how many contracts you're trading, whether you're trading one contract, 3 contracts, 5 contracts, 10 contracts, 20 contracts, or more. It really just depends on how many contracts you're trading as to what are the variations of the different options that you have as far as scaling out of your trade at this point. If you have only one option contract, then you are either in the trade or out of the trade. There is no scaling available to you because you only have one contract. Generally, with scaling, you would like to have at least 3 contracts or more to give you the option for scaling out, because of the fact that when you're scaling out, it's best to scale out of the majority of your contracts early on at the TP levels 1, 2, 3, and 4, should those be hit, and then you are able to manage your runners throughout the rest of the move, should the move continue to move in your favor. Now, depending on how many contracts you start off with, can also decide at how many different waypoints you can make decisions and how many different scale outs that you can do. Obviously, if you're trading 10 contracts, you can scale out of, say, 70% of them here, and then that would give you 3 contracts remaining to continue to manage and then decide at each one of these level moves in your favor if you would either like to just keep adjusting your stop loss from break even to a greater number of break even plus a profit buffer, or add additional profit buffers as the move continues to move in your favor, or at any given point as the move continues to move and hit different waypoints and different TP points, then you can make the decision as to whether you would like to exit any of your remaining runners and continuing to at least hold one runner throughout the finality of your trade to the final exit. Okay, so here at 9:58 a.m. we have the hit of TP2. That is the S2 level. That is a full 2-level move in your favor. We have the bid on the candle close of $34.30. Here at 10:12 a.m. we have TP3 getting hit. That is the mid S2, S3 level, and that is TP3 for your regular trade, and that is a full 2.5 level move in your favor. And at this point, the bid is up to $50.40 on this candle close of the 10:12 a.m. candle. Now here at 11:50 a.m., we have a hit of TP4, which is at the S3 level, starting from the bull bear key price level, and now we have a full 3-level move in your favor, and this is now in today's session TP4, as this is the 4th profit target starting after the TP1 target up here. The bid now on the 11:50 a.m. candle is $64.10. Now at 12 p.m., we have a hit of the YDL level. That is a very important level as well. It's yesterday's daily low, and that was where price stopped yesterday before reversing. So that is a very important level, and normally you will see price stall out at this level or attempt to reverse, which is what it did here, but then eventually it sliced through that level, which is a sign of continuing bearish momentum. And on this 12-12 hit of the YDL level here on TP5, we have the bid at $75.20. Here at 12:30 p.m., we have a hit of TP6, and this is now a full 3.5 level move in your favor from the starting point of the bull bear KPL. That's one level, 1.5 levels, 2, 2.5, 3, and now 3.5 at the mid S3, S4. Now we're up to $80.90 on the bid. Then here at 1:12 p.m., we have a hit of TP7. That is on the S4 level. Now the bid is up to $101.60. Now for keeping track here, we're starting off TP1 for the regular trade at the minimum 1.5 level move threshold. Each of these is an additional target of each of these succeeding levels that continue to move in your favor, including, as we stated earlier, if any of these PMH, PML, YDC, YDH, or YDL levels. So that is why this YDL level here is also counted as a TP. So we have TP1, TP2, TP3, 4, 5, 6, and now 7. As far as level moves in our favor, we have a full 4 level move in our favor now. And as we said, the price of the bid on this candle close is now $101.60. As you can see here at 1:48 p.m., we have a touch where it wicked down and touched this level, then it started going back down again, and eventually it did close through this level, but stopped short of the S5 level. So the mid S4, S5 level of 68.7592 is our TP8 at 1:48 p.m. on this touch here on the wick of this candle. And the bid on the close of this candle is $110 after making a high of 113.30 on the touch of this level before it wicked off of it. Okay, so the indicator's key levels can help guide you to focus on the art of scaling out and managing runners level to level. Instead of an all or nothing gamble, you systematically peel off contracts at earlier TP levels and let the runners ride the momentum as price continues to move in your favor. The general idea is to lock in early profits by scaling out as price moves through at least the TP1 through TP3 regular trade levels, and then adjusting your stop loss to at least break even on the remaining runners to de-risk the remaining portion of the trade, then manage the remaining option contracts level to level thereafter to keep growing profits to try to catch the majority of a big move. Okay, so that's going to wrap it up for today's video. As I mentioned earlier, look in the description of this video and you will see links to other SPX session videos that go into more details about this indicator, about the levels. They also, those videos go into trades that are taken off of other main key levels, other main R and S levels throughout the rest of the session. And also, one of the links is also to a session video we did recently, which goes over our full Lotto options strategy. So we spent about 45 minutes in that video going through the entire process about the different types of Lotto option strategies, what are the rules, behind the Lotto option strategy and the whole process. So if that's something that interests you, you might want to take a look at that video as well. Generally, the Lotto option window starts at 2 p.m. and as far as considering trade entries for Lotto options, it runs to 3:45 p.m. The session ends at 4 p.m. Eastern New York time. So the window is 2 p.m. to 3:45 p.m. and then the majority of the best opportunities are generally in most sessions going to be between 3:30 and 3:45. So if you're interested in Lotto option strategies as well, take a look at that particular video. Also, there's a Google Drive link in the YouTube description of this video, and if you click on that link, you will see descriptions of videos that are on specific topics concerning this indicator about various different topics, including 0 DTE options versus 1 DTE options for day trading, option strike selection. Generally, there's 3 different option strikes that you can choose from on any bullish or bearish trade from any of the key levels, and we have a video specifically on that particular process as well. And then there's several other videos on other specific topics as well. So I would invite you to click on that Google Drive link for that document, and you'll see a whole list of videos on specific topics. And there's also a link in the description of this video for a general overview of this indicator as well, which goes over some of the inputs and display options, etc. about the indicator. Okay, so that's going to wrap it up for today's video. If you are interested in purchasing this indicator, you can send us an email at daytradinggps@gmail.com to request a discount promo code, and we will send you a promo code for a substantial discount on the purchase of the indicator. All of our indicators are sold currently on a one payment for lifetime access basis. Lifetime access includes any and all future updates to the indicator that we come out with, as well as any future versions of the indicator that we come out with that add additional features. Okay, so thank you for taking the time for watching this video. If you did like it, we'd appreciate it if you would hit the like button, as that helps us with the YouTube algorithm. And thank you again for supporting our channel, and we wish you much prosperity in all your future trading. Thank you.